Hi, welcome back everyone. Today I am joined with my buddy and president of Blue Creek Capital, Shaun Gibson. Shaun, thanks for joining us today.
Oh, thank you for having me.
Now, you and I were actually just discussing this a couple hours ago, talking about how gold in the recent month has really just been steadily increasing. A lot of different factors out there play into this, but you had quite an interesting opinion on, I believe, quantitative easing and how that plays into this all. Can you maybe elaborate on that further for us?
Yeah, well, quantitative easing really is just diluting the currency. So more US dollars are printed. The last two times there was quantitative easing, the gold price went up significantly. So with more printing this time, and the US dollar being diluted, it's measured in gold is measured in US dollars. So the gold price should go up again.
Yeah, well, I think we all like the sounds of that, and really, it seems like the last few quantitative easings, it has led to higher and higher gold prices. Now, moving kind of forward into what you and I do on practically a daily basis is look at financings, and we've seen quite a few of them come out in the last
Yeah,
couple weeks.
no, I like buying the financing. It's an interesting window right now for buying financings. The beauty of this window is the stocks are starting to rebound. The gold stocks and the mining stocks in general are going up with the gold price, which is going up. They also went up fantastically well in the last two quantitative easings. So right now, I'm buying the financings because you get a warrant with the financing, but also the financings. Well, what often happens is the share prices get kind of beaten down when a financing happens, and as soon as the financing's done, they bounce back up again. So we're effectively getting the summer lows in the prices of these financings, these stocks that are being financed, yet we're buying them now after the market's taken off. So we're basically getting them on sale.
So that's much, much better than buying it in the open market, as you and I discuss practically on a daily basis. But with all of these
Pretty much.
financings, there is that 4 month hold period. What do you typically see at the end of that period?
Well, normally, what typically happens with the financing at the beginning, the price goes up a bit after the financing, and that's why a lot of people will buy shares on the market at the same time as the financing, with the goal of selling that a month or two into the 4 month hold. When the 4 month hold comes up, people will sell up to the 4 month hold, anticipating a drop in the share price. So normally there's a bit of a parabola from the financing to the 4 month hold. Stock goes up, stock goes flat, stock goes down.
And then hopefully the stock goes back up again because we've hopefully bought into that, right?
Exactly, and that's what often happens. You really have to wait till about 5 months and see what really happens with this stock.
That's interesting, and I hope that that really comes up now that we're coming into what seems to be a greater time for financings. People have come back from summer and now they're looking to raise money and get their drills back into the ground.
And it's a fantastic market right now for buying financings because often the spring has the highest prices of the year. And right now your 4 month hold will come up early spring. So
Ah,
you'll probably get that full 5 months in and still be able to sell the stocks if you need to at times the market's normally at its highest prices.
mm-hmm. Ah, so this is why we're seeing so many financings come across our desks nowadays.
I think desperation's a lot of it too, because normally in the summer, companies don't like to finance.
Hmm.
Everyone's away on vacation, and in general, the markets for junior stocks are really liquid and quiet. So a lot of these companies are just broke. Like John Kaiser had the absolute best quote on the junior markets right now, and I think it was something along the line of was it over half the companies on the Toronto Venture Exchange are trading at less than 25 cents now, but have to raise money in the next 6 months, and that was back in the summer. So over the next few months, almost half the exchange will still have to raise money. And that's just a wonderful opportunity for us to get these financings the best terms possible.
Yeah, wow, really, it's just a desperation financing, and these guys they need to raise money, or else how are they going to increase their stock price? And that's when we just see it continue to dwindle and drop and drop.
Yeah, and right now it's interesting because when you do the evaluations, some of these guys just want to raise money to pay their salaries, the overhead, their geologists. If you give them the money, they won't actually do anything with it that'll actually increase the value of the company. All they'll do is just burn through it on their own expenses. So part of the trick is to find out, okay, which ones are going to spend the money on actually developing an asset or finding something new rather than just spending it on themselves.
Yeah, those are the stocks that we really look at and we decide not to go into because we want our money going into the ground to make the company better, not just to pay these management their daily fees, which they've managed to run themselves dry with in the last year.
Well, that's where accountants like you come in.
Yeah,
to
perfect.
figure out
That's
to
why we
figure
work
out
so
who's
well
spending the money
together.
where.
All right. Well, thank you very much, Shaun. Thanks for providing that great insight into these recent financings, and I'm sure we'll be in touch soon and get an update from you in the next couple weeks.
Oh, no problem. Anytime, Corey.
Thanks, Shaun. I'll talk to you later.
Talk to you later. Bye.
All right. And